This is Made for More Living with Johnny Jennings, powered by eXp Realty. Online at madeformoreliving.com.
So I'm here talking with my good friend Liz Andersen with American Pacific Reverse Mortgage Group. And Liz, I was going through my bag. I have this little, briefcase that I take to work every day. And I pulled this little guy out. And I was like, well, how'd that get in there? So if you're listening on the radio and you can't see what I'm holding up, it's a little action figure from, what was it called? Captain Planet. From the show from the early 90s. Wow. It was a cartoon thing. So I grew up without TV. And so that's not true. I grew up with television, but my parents required us to read for 45 minutes in order to watch 15 minutes of television. Smart. And so we get little tickets. Yeah. And you can only watch so much television if you're having to read an hour and a half to watch one show, Wow. So, but one of the shows that we were allowed to watch was Captain Planet. And so it's just been fun as we've have our, Jack a little over 2, and now Ben was recently born.
That's awesome.
So anyways, Jack's putting this, putting LeVar Burton. So actually the character I'm holding up is Kwame. We're going deep on Captain Planet right now. Kwame is actually voiced by LeVar Burton. And LeVar Burton, he did like Reading Rainbow. He did Geordi on Star Trek. And he's from Sacramento.
Wow, I didn't know that.
Yeah, so
that's pretty cool.
He was born overseas, but then his family moved here and when he was about 2. And then they moved back, so he considers Sacramento to be his hometown.
You know your history on that guy.
Yeah, well, I'm a Star Trek nerd. So
how is he doing with the baby at
Jack?
Home? Yeah, how's Jack doing with that?
He good. I mean,
you say that with a little hesitation.
Well, it's just so I'm the oldest, and Valerie's the oldest, and so we, have the younger siblings, and so I'm way our birth order was really quick with my brother and sister. So it was me, and then 16 months later, my mom gave birth to twins. Oh, wow. So really close together. People thought we were triplets, and so I obviously don't remember any of that. But I can see. So I'm just trying to envision what I would have been like at his age.
Oh yeah.
And just process, and you can just see hey, mom's more busy with Ben. He was the only grandkid, right? And so now he's not the only one anymore. And so, anyways, but he's doing good. He's getting to the point where he's held Ben a couple of times, and he's really nice to Ben. And every time before I leave the house in the morning, I go, "Hey, Jack, you're gonna take care of Mama, right?" And he's like, "Yeah. You're gonna be nice to baby Ben." Yeah. Okay. And so it's always taking care of Mama and baby Ben. So
I love it.
But yeah, so he's doing good. But back to the subject matter at hand.
Keep chat.
With reverse mortgages, what I'm seeing more people use them for, honestly, is rather than staying put in an existing home, they're using it to relocate and get closer to family, or relocate to maybe somewhere in a more cost-effective place to live rather than where we're at.
Yeah.
Can you speak to a little bit about that? And also, what are are there guidelines? How does that work?
Yeah. So I can start off. I do have a relocation story, and you're right. People are moving closer to family, moving closer to medical facilities, right? Some people up in the mountains are
Truckee.
100%. Although Truckee has a really good medical facility, but there are people that are just away from hospitals, away from care, away from family. And as you get older, you just want to be closer to family and those things. So I do have. I had a client. It was during COVID that reached out, and as we were coming back from COVID, and said, this has really taught me a lesson. I have been alone, locked up by myself, without any of my family.
Yeah.
And what we realized at that point in time is there's a lot of people that are alone at that age, and we all need connection. And I think it was a big eye opener for some people. So I had a client reach out to me at that time and said, you know what? I know I want to be closer to family. So she was looking out. Her family was in Florida. So, of course, Florida is a place where a lot of reverse mortgage clients go to retire.
Sure.
Yeah. So the senior population is large there. They listed their home here at $544.
Okay.
So after sale, after we paid off whatever they owed and commissions and all of that, their net proceeds were approximately $382,000. Okay. And we know that in Florida at that time, possibly still now, you can purchase a home for $300,000, which is where her price point was. So she went out to Florida. At that time, the way that we calculate a reverse mortgage loan amount is we take the age of the youngest borrower, the current interest rate, and the value of the home. That gives us a loan amount available to the borrower. So the loan amount at the time to the borrower was $112,000.
Okay.
Her down payment was the remaining amount of that $300,000, which is $188,000.
Wow.
She still had funds left over of $194,000 after she purchased the Florida home.
And no payment.
No payment besides property taxes and homeowners insurance.
Wow.
So that is the power of the purchase, of the reverse for purchase, is that you can, most of the time, and it just depends on what area of the country you're going to relocate to, that you can make that purchase and then possibly still have funds left over to add to a retirement portfolio, to have as an emergency fund. You know, it's really important that we look at cost of living these days.
Yeah.
I mean, we talk about fast food workers making $20 an hour now, right? How is that going to affect our pocketbook?
Correct.
So everything is going up. And I continue to tell my husband, you know, you really think things are going to come down? I mean, look at the history of real estate. My dad purchased his first property, 1974, again in Truckee. He purchased it for $32,000. He sold it last year for over $1 million.
Wow.
So what do you think? You think that things are, unless we have a worldly event that, who knows in this day and age, but I just think that we'll continue to see things rise.
Absolutely. And I mean, you told the story about Truckee. I'm working with a lady in Folsom. She bought the home brand new. She's got a lot of miles on the odometer, but she bought the home brand new in 1960 for, I think it was $10,000.
Wow.
And it's worth, almost $6 now, almost 600. So, it's just, and she was so pissed at her husband. She's like, why are we overpaying for this house? Right. And so it's like, okay, if you hang in there long enough, it's going to be worth something. Yeah. There's stories about people buying houses in Natomas for $90,000 and they're like, oh, you're way overpaid. And now they're worth way more than 90. Yeah. And so I'm so excited to go in. Like, I had honestly forgotten about the purchase side of a reverse mortgage and the fact that a payment was not due. Correct. On that, because there are so many people that are wanting to relocate to be closer to family, like grandbabies, right?
Oh yeah, that brings people closer to.
It's like it's its own type of gravity. It's a force of nature. Yes, grandchildren, and so, but they're wanting to be closer to family, but they can't afford or they don't want to deal with that monthly payment.
Correct.
And a reverse mortgage is a great way out of that. So aside from...
We want to talk about a little bit about guides and
qualifications. Yeah. So aside, there's some age limits and some other stuff, correct?
Correct, yeah. So I won't dive too deep into that, but I'll just kind of give you a little bit about, if you wanted to get more information in regards to qualification. So when I first started, the age to qualify for a reverse mortgage was 62. And that is for the traditional FHA reverse mortgage, which is the one that is predominantly used in our industry.
Okay.
And it's called the HECM. That age qualification is 62 years old. So at least one person that's going to be living in the home has to be 62 years old.
Wait, what about this? What if somebody's 62, somebody's under the age limit, the older person passes, the younger person doesn't qualify? What happens there?
Well, actually, there's something called a non-borrowing spouse. Okay. So that rules came into play a few years ago because before, if somebody was under the age to qualify for a reverse mortgage, they would have to sell the home or get a loan and stay in the home,
and
right?
Refinance, yeah.
And so what happened is that lawsuits came into play. And so they made rules that somebody that was under the age of 62 could live in the home. The one thing, And so they will be able to stay in the home if, let's just say, the person that was 62 years and older, the borrower passes. The only exclusion to that is, let's say that a borrower was receiving monthly income or had a line of credit established with the reverse mortgage from some of the loan proceeds. At the time that that older person passes, then the spouse would not receive those benefits of a monthly payment or the line of access to the line of credit. But they can still remain in the home, living in the home, as long as they pay their property taxes, homeowners insurance, live in the home as their primary residence, and maintain the home. So they made rules so that the person that was younger wouldn't be forced to sell the home or have to get a traditional loan to keep it.
Got it.
So some things came into play. Yeah.
Good.
Yeah.
So basically you're not out of luck if
correct. Yeah.
There's options.
And I always tell people, just make sure, if the older person's like, let's just say 65, and the younger person is, let's say they're 60 or 61, and they could hold off to do the reverse mortgage when they're both of age. I just think it's better for everyone, because then they receive the benefit of getting the continued monthly income. Because if both of you are on Social Security and one passes, you lose an income.
Yeah.
So that's another reason to do a reverse mortgage is, when somebody passes and you lose an income, where are you going to replace that income from? Right?
Yeah.
So a reverse mortgage is a great option. I do have a success story on that. We'll talk about it a little bit later, but let's talk about guides and a little bit that you need to know. So 62 years old for the HECM. There are other programs now in the market that are 55 years and older.
Wow.
So
is there any detriment to starting it sooner rather than later? Like interest rates higher, loan ratios lower?
So yes, there's a couple of things. So yes, the younger you are, the less loan proceeds you receive.
Okay.
The older you are, the more loan proceeds you receive, because it's based off of life expectancy, right? So the older you are, the less time you're going to have the loan. So the more they're willing to lend. You got less
sand in the hourglass.
Yes, for sure. So, and then in regards to rates, so let's talk about, I can't get into rates in detail, but people will always say, well, should I wait for rates to come down? Well, first of all, we're not predictors. No. I have been telling people that all year long I don't care what people say in our industry. We don't know what's going to happen. There's so many worldly events that affect our industry that I just say, is it the right time for you?
Correct.
Right?
Yeah. If you didn't see a global pandemic happening, if you didn't call that, then don't try to guess what's going to happen in interest rates.
Yeah. So we talked about age, 62 or 55. And often people think that they wouldn't qualify for a reverse mortgage because they're on limited income or off fixed income. And so it is a little bit easier to qualify for a reverse mortgage rather than a traditional loan, because we are not debt to income ratio based, right? So we don't look at the income part like traditional lenders do. We take a look at what residual income is left over after you pay off all your monthly expenses. So I'll give you a quick rundown. We take all of your monthly income, whether it's one or two people living in the home, and then we run a credit report. Now, we are not FICO driven, so we don't look at the credit score, but we do look at the last 24 months of payment history on a credit report. And if that looks good, you've made payments on time for the last 2 years, as well as property taxes on time, we check that, and we look also at homeowners insurance being paid on time. So we look at all those things being paid on time. If they have paid everything on time for the last 2 years, then they credit qualify. Okay. So, and even if they have a few dings on their credit report, we can still do the reverse mortgage. It just entails a little bit more. So the other thing is, so that is credit. Now, income, we take their income, we deduct all of their minimum payments from their credit report. We deduct property taxes, homeowners insurance, and 14 cents per square foot in the home for utilities.
Okay.
If there's one person living in the home out here in the West, they have to have $589 left over, and they income qualify.
Okay.
If it's 2 people out here living in the home, it's, I believe, $998, so $1,000 left over to live off of. So if you meet those 2 requirements in credit and income, you qualify.
So basically, there's the age requirements, and then essentially it's the home, right? They're saying, do you have enough equity in the home?
Yes.
And then they're gonna build out a package based off the equity in the home.
Correct.
Awesome. Thank you so much, Liz. And if you want to get a hold of Liz, just reach out to me. You can go to madeformoreliving.com. Give me a call. She is our preferred reverse lender, our favorite reverse lender out there. And what's your direct phone number as well?
916-223-8869.
Thank you.
If you're struggling financially right now, you are not alone. Times are tough for a lot of people, like Steve in Roseville. He needed some extra money fast, so he decided to sell his property and gave our friend Johnny Jennings a call with the Tom Daves real estate team. Johnny guarantees that he can sell any home, so Steve knew he'd be able to get the money he needed, and that's exactly what happened. Johnny Jennings and his team was able to get Steve multiple offers and even sold the home on the timeline that Steve wanted.
So if you've been wondering what kind of offers you can get on your home, now you can find out. Or even get a cash offer when you talk to Johnny Jennings and the Tom Daves real estate team. You can reach out at 855-TOM-DAVES, or you can go online to tomdaves.com. That's Tom, DAVES.com. You are not going to regret working with the professionals, Johnny Jennings and the Tom Daves real estate team. So give them a call today. License number 581837.